The Fed is supposed to cut rates again at any moment, and here before we end the year 2024. This video, I'd like to explain that, some of the impacts currently and in the future, and what it means for you and your money. As I record this video, at any time, the Federal Reserve is supposed to cut interest rates. And they expect to lower it usually probably by a quarter of a percentage. So reducing it from, say, around 4.6 to probably 4.3%. The Fed also plans to slow the pace of rate cuts in 2025. So that's probably only going to be 2 or 3 reductions throughout the year. Now, why is that significant? Well, if we look at inflation trends, inflation has cooled off significantly from 2022, from when it was around 7% to now only 2.3%. So hopefully that trend will keep continuing. Inflation slows down, it reduces. And the Fed's target all this time has been around 2%. So some could say that it's been very effective in controlling price increases. You know, during this past election year, the economy was one of the biggest, if not the biggest issue, and people were talking about how high the grocery prices were, how much something costs. Well, it looks like that inflation is dying down. It's cooling off. It's reducing. So hopefully we've seen the last of crazy high grocery prices and other goods and products, crazy high inflation. The economy, the U.S. economy, is going strong. So it's up 2.7% GDP in 2024. So that's good. A lot of consumer spending. Now, how does this impact you in terms of borrowing? Now, just because the Fed is going to cut the rates and have been cutting the rates doesn't mean you're going to see immediate benefits if you need to borrow money. So, for example, if you need a 30-year mortgage, the rates are expected to remain kind of where they are, which is around 6.6%. So you won't see that big of a difference when it comes to things such as mortgage rates. So if you're looking to borrow for a house or some kind of shelter, then it's going to be kind of what they are right now. Now, we got a new administration coming in 2025, the Trump administration's proposed policies. And these include potential tax cuts and tariffs. That's been a big deal. Made news quite a bit, the proposed tariffs that President-elect Trump is going to implement, which is going to add uncertainty to economic forecasts. So these policies that the Trump administrations are going to implement, that could influence inflation trends and the Fed's future monetary actions. As is such in economics, it's always a balancing act. So the Federal Reserve is trying to always find a neutral rate that neither stimulates or restricts economic growth. You're trying to keep a balance, with the goal being the balance controlling inflation while at the same time sustaining economic expansion. So how does that balancing act occur? How do you keep inflation from getting out of control while not stifling and stalling economic expansion? Keep your eyes on the news. Let's see what happens with this rate cut, this interest rate cut. It should be around 0.25, and it should be the last one of the year 2024. Keep your eyes on the news when it comes to the Trump administration's proposed policy, how that affects inflation, how that affects rate cuts, and let's see how that affects your pocketbook. Again, I wouldn't expect of course, reducing interest rates by a quarter of a point, 0.25, is a good thing for most of us. But don't expect too much of a change, a major change with things such as home loans and mortgages. If you like this video, go ahead and hit that like button. If you hadn't already, subscribe to Diversified Dollars. Appreciate it if you hit that subscribe button and ring that notification bell. And I guarantee you, I can show you how to make money, save money, invest your money so you can live life on your own terms and work because you want to, not because you have to.